So welcome everyone. Thanks for joining. Nice to see you all again. Today, I'm very happy to introduce someone who many of you already know, Omri Ben Shahar. He is the Leo and Eileen Herzl Professor of Law at the University of Chicago Law School and the Kearney Director of the Coast Sandor Institute for Law and Economics. Before I hand it over to him to present his paper, I'm just going to advertise that in 2 weeks, we have Guido Rossi, of the University of Edinburgh, who will be presenting a paper on 16th century English insurance law, which promises to be fascinating. So I hope you all will join us for that one too. And now over to you, Omri.
Thank you. Can you hear me?
Loud and clear.
This is great to be here. It's the first time I'm presenting this particular set of ideas, which is actually a pilot towards a more ambitious project. I'll just say briefly, I love insurance law, I teach it, but it's a little bit of a side gig for me. Recently, I've been very much interested in the area of law and AI. And part of what I have noticed as I started writing in this area is that it is the writings and the thinking about it is dominated by people who are largely put negative on this, talking about the risks and the dangers rather than the benefits and the promise of all the good things that can come from this. And, this is tied to a long-standing phenomenon that we see historically, type of resistance to new technologies and fear of how they're going to change life as we know it. I want to write about that in the context of AI and how the law is addressing the monumental changes that it brings to society, but focus on aspects of the data technology that are shown and have been demonstrated to provide fantastic value, particularly value in saving human lives. And trying to understand how this resistance gets so much traction. Why is it so dominant in the discourse when the cost of slowing down progress in this area is monumental? And so I'm working on several examples of this, and hopefully at the end tie them to a unified thesis. A lot of what I'm trying to do here is be open-minded to show, look, these are enormous benefits. How could you not be wowed by it, and how could you stick to the resistance and to the precautionary principle? But I'm really open-minded about it. I really want people to help me see what is it that I'm not seeing, why, and hopefully I will get that in part in this workshop. So this one is about technology in auto insurance. And I've spoken a little bit to the people who are involved in operationalizing these algorithms. But I would love to have more contact. If anyone here today wants to follow up and explain to me things that I don't understand, and I'm sure there are plenty of them, about how these things really work, or find channels for me to speak to insurers or the data company that they hire to kind of tell me a little bit about how they work and clarify some of the landscape for me, that would be fantastic. I have a little bit of that. I've done a little bit of that, but certainly not enough. Okay, so what are we talking about? Talking about the auto insurance and a model that's called usage-based insurance or telematics, using telematics. And here is basically what it is. It's an optional enrollment plan for policyholders now offered by almost all major insurers. It is usually when you enroll, you receive some kind of upfront discount as an incentive to enroll, but as we'll see in a minute, not just as incentive, as part of the prediction of the risk that you carry. Then you're tracked, which means initially when this was launched, these were devices that were given by the insurer to the policyholder to install in the car and to record real-time driving patterns. Nowadays, many cars come with built-in connected technology, so it does not have to be kind of stuck under the hood, but otherwise, one way or another, it's fairly easy in today's technology to track and measure these things like speeding, like where and how, for how long you've been driving, hard brakes, unsafe following, aggressive turns, especially left-hand turns, those that are more associated with collisions, abrupt lane changes. Some of these devices are operated through smartphones. You can also measure distractions like handheld calls or texting and so on. All of this data is then used to predict the risk. How is that done? Each driver, each policyholder has a safety score that is calculated and that changes over time based on calculated by algorithms that have been trained on the basis of past accident data. They identify factors that are associated with increased driving and collision risk. And when they see these factors in one's profile of driving, they reduce their safety score, the policyholder safety score, namely, they classify that person as riskier. And as a result, premiums change, and they change often by many insurers. They can change monthly. They actually do, to reflect the up-to-date that month, past month's safety score. The market share of this plan is growing right now. I think it's about 22% of the market. But, and this is kind of the legal hook for this paper, it's prohibited in some places or severely restricted in others. This is what this looks like for the user. So if you're a Geico insured, you have the device and then you receive the feedback. This is from a smartphone, but there are ways to also install it in the car or see it on your computer, and it changes all the time. So here's today, this person had a score of 94 out of 100. It shows the miles driven, the number of trips, and the trends. And these are the measures, these are the factors that are key to calculating the safety score. For example, phone distractions, speeding, hard braking. You see they all are here, and they can go to either to your period or your week or your day or your trip. Everything is right there in front of you. This is the same thing for Tesla insurance. So Tesla, because it is a connected car with a lot of cameras and autopilot capability, it measures these things anyway, all the time. And if you want, you enroll into the Tesla insurance. By the way, insuring Teslas are pretty expensive in the main kind of insurers. And this is because of this data, the upfront cost for people to switch to that is fairly attractive. Again, see a safety score, and again, you see the factors with breakdowns that are on this dashboard that are interactive, all in the app, and all are fairly easy to read and to understand. So this is the technology. The law, by and large, in most states nowadays, does not regulate it. Well, not regulate is, of course, an exaggeration in auto insurance. It doesn't regulate that differently that it regulates other statistical models of auto insurance. The rating plans have to be approved. This for state, let's say Ohio, this is just another statistical model that has to be submitted. Maybe not the atomistic data, but the formula, the model itself. And many states have, of course, these privacy regulations with all the junk privacy disclosures that are added in this particular context because of the data privacy aspect. California, on the other hand, prohibits UBI outright. Premiums based on a proposition and a referendum that passed maybe 40 years ago, premiums must reflect 3 mandatory factors, which does include something about how much you drive, namely miles driven, and other things like past record and experience. There are additional optional factors, but there is an outright prohibition to use technological devices to collect or store information other than the miles driven. which has been interpreted by insurance commissioners in California to prohibit the use of these telematic devices, and UBI is not offered in the state of California. Other states restrict how UBI data is collected, how usage-based insurance data is collected and used. And two primary examples, both that come from the state of New York. One is discount only. Whatever the insurer does with the data should not be used to increase the premium, only to reduce, and also to deny renewal. And there are also some things that are prohibited, cannot collect. For example, kind of peculiar choice for lawmakers. A company may collect distracted driving statistics. However, such statistics may not be used in the algorithm to determine the final UBI score. Why? I'm not entirely sure. The explanations is this is to protect people. Again, I'm kind of trying to think about what conception of protection lies behind that, especially in auto insurance where it's all about cross subsidies. And so who is protected and who is not, it is a puzzle. There's a lot more to say about the law, but this is the basic picture. And now I want to do two more things, talk about the benefits of UBI and then the resistance to it, the concerns about it. The benefits, well, in theory, the benefits will come through several mechanisms. First, the rationality mechanism. People are rational, and if they are offered premium discounts that reflects their improved driving, they will improve their driving. So this is kind of way to reward them, to lure them through their rational kind of preferences. Second, there is an information logic. People don't exactly know what is dangerous and what is not, in part because accidents occur so rarely. So you can't really base it on, oh, when I did this, I got into so many accidents, and I did that, I got into fewer. You don't get into accidents. So they need information. And there is a coaching aspect to usage-based insurance in the sense that as you drive with these devices, and anyone here who has it knows, you hear beeps when you are getting too close or about to make a dangerous lane change or speeding towards a red light in cars that can see red light with cameras, and so on and so forth. So it has this kind of this coaching effect. And finally, there is let's call it a psychological effect. When you're being monitored, everything is recorded, something cognitive is triggered. Can think of it as a switch from system 1 to system 2. Driving is mostly automated, almost thoughtless process where you don't think about everything you do in full, whereas there is this, at least in theory, when you are being watched, you behave in a more deliberate manner. So does this theory play out? Well, what is striking is that at least the measures that I have seen for the impact on safe driving are striking, are staggering, almost too good to be true. But they are being consistently shown in study after study. So here's one study from the Journal of Law and Economics 2 years ago, which I think, I would only use it here as a baseline. I don't fully believe the numbers, but it suggested that when Progressive Insurance, the first carrier to introduce UBI with what they would call their snapshot program, that led to 50% reduction in accidents among those who joined. They showed that about 4.5% of their policyholders joined, and there was about 9% reduction in accidents. So that, or vice versa, 9% joined and 4.5 reduction in accidents overall. So they said they must be that these folks have incurred 50% reduction in fatal accidents. That is more of a back of an envelope kind of calculation, and even though it shows something really surprising, I wouldn't just base my benefit slide on that. Several other studies have given a more a bit more rigorous methodology, significantly more rigorous methodology on that account. So, for example, Jin and Wasserman in 2021 showed, again, based on insurance data, on what happened to the people who joined, what happens to their safety score over time. They show that it makes drivers 30% safer, based on how the insurance company views them and also the risk that is associated with it. Another paper showed 21%. Well, again, this is data based on patterns of driving patterns, not just the safety score, but actual measures of risky maneuvers and participants and non-participants. So there's a 21% reduction in hard braking. Almost all policyholders exhibited some improvement in driving. Most of the improvement occurred in the first month and persisted afterwards, so it's a really quick effect. And in states where auto insurance is more costly, the improvements in safe driving have been larger, suggesting that there's also an aspect of this rationality. People want where the reward is greater in terms because the premium discounts mean more when it's costly, and there is a greater effect. So here's from that last study. Here is one of the graphic displays. You see the upper slope is what happens to the safety score. They call it the UBI score. And you see that after 30 days, something roughly here in the middle, you get to the top and then it just persists. And then the bottom slide, you look at here's a measure of one of the driving patterns, hard brakes. And again, rapid decline. Within 15 days, you basically learn to drive better. I have to say, just as a personal kind of testimony, I joined one of these programs and my safety score initially was not so good. I mean, they start you at a very high, but it quickly declined. I thought I was a good driver, but once I started listening to the advice of the algorithm, it took about 30 days to restore it back to the high levels. So I personally believe these numbers or these displays. There are also experimental studies that have been done. So those are big statistical studies, mostly with insurance data. Of course, that's the only data you can get because this is an insurance program. But there are also experimental studies that are done by trying to see if you can get a sample of people and motivate them to do the things that UBI would motivate them to do. There's a Netherlands studies that showed 14% reduction in speeding. They paid 50 euros per month for people to reach a speeding milestone that was explained to them. And they showed this kind of reduction in speeding. What does 14% reduction in speeding mean? Here I'm just throwing in some prior data in the EU that shows that a 5%, these are based on the very large studies and data and long-term, 5% reduction in speeding is associated with roughly 10% decrease in injury accident. So you see the 14% again gives us that magnitude of somewhere around 30% reduction in injuries and fatalities. Another Swedish study showed another interesting, similar kind of directions. This time they measured speeding violations, not just speeding, 64% reduction in speeding violations, and an interesting psychological or the behavioral effect. When people get penalized, as opposed to rewarded, penalized for having a violation as opposed to rewarded for having no violations, we see a stronger effect in the penalized group. That ties into many other kinds of things that have been shown in this cognitive psychology. Okay, and yes, and sharp reductions also in other driving factors. So this, okay, pause for a moment. What have we just seen? 30%, roughly, 25 to 30% reduction in fatalities in accidents. You just say, 40,000, 42,000 people died last year in road accidents. 30%, that's 12,000 people. And California prohibits it. I'm stumped. And so why? Okay. So this is oh, wait. Before that, I jumped the gun. There are other benefits to UBI, if that is not enough, you know, small, dwarfed by what we've just seen. Lower premiums. So policyholders share to some extent the benefit from it. Early on, when Progressive.com was the only insurer offering it and shielding the technology with a bunch of bogus patents, they shared the value to a lesser extent. But now, when the UBI market is competitive, there have been some demonstrations that the value is also being shared with the policyholders. There's, of course, the reduced reliance. The mother of all sins of auto insurance is classification that are imprecise and regressive. And to this group, I don't have to explain this. And so you do away to a large extent with that kind of rating and replace it with driver-specific rating. And this we'll talk more in a minute, the distributive fairness. There is true actuarial justice. Each driver pays not because as much as not how we profile them based on where they live or how many years of schooling they have, that correlates, but on how they drive. Auto insurance is one of these areas of insurance where there is a widely shared belief that people should carry their own weight. It's not because you were born a bad driver or because you have some kind of tendency that it is how you drive, and everybody can be better drivers, so they should carry their own weight. And this is what this system does. It does, as I said, it does not rely on suspect classification. So if you don't have a big home, many years of school, good credit rating, and a nice neighborhood zip code, you're no longer punished by the price. And as you see in this kind of slide, when you measure miles driven, who drives more? The blue line is the miles driven, distance driven per driver, and you see that as you move along from left to right and you get to more and more affluent people, they drive more. So the lowest versus the highest drives twice as much. They should pay more. Starting with pay as you drive, and now with pay how you drive with UBI, that can be put in effect. Another illustration is urban versus rural. Of course, this is not necessarily a measure of poverty, but it is a measure maybe of racial patterns. You see that on the left-hand side, for urban drivers, there is a faster and larger increase in their safety score. So which translates to lower prices, lower premiums. And likely on the right-hand side, you see that these urban drivers have a very immediate large decline in the number of hard brakes. That too operates to their benefit. So the way it plays out is to benefit poor people who drive less, who live in urban communities, and so on. I'll skip this for now. So the resistance. Why is it opposed? So I'm still working on trying to really get into the mind of these folks. But here is most of the people that ride on UBI, most of the reports I read talk about that. Nobody talks about they mention in passing that there might be improved safety, but that's kind of a footnote. What a 50-page report would talk about are these factors: privacy, transparency, power imbalance, and distributive justice. So let's talk about this for a minute, and I promise I'll stop, 3-4 more minutes, and I'll open this for discussion. So privacy, a big brother argument. The car is your place, it is your private dominion, and now insurers have the surveillance eye in there, the spy in the car. Okay, now yes, people are given discounts when they are joined, but that means that if they refuse to join, they're being penalized. So there is some kind of coercion to give up privacy. We see this argument in many other contexts of the data privacy. There's a concern with misuse of the data. Maybe insurers will commercialize it in some ways. Maybe they lose it in some way. And there is also a concern, this is core constitutional Fourth Amendment concern, and I take it very seriously, that it might be subpoenaed by law enforcement, and to some extent that has already happened. Of course, this is because our constitutional order has thought that this is a good thing to do, to use this data, but it might be, an aspect of privacy that others might consider to be objectionable. I'll say two things about this. One is, first, it's an opt-in regime. It's not an opt-in regime that a mindless opt-in. It's not easy to opt in to UBI. It's not a click, I agree that you don't notice. It's not a dark pattern. It is complicated and inconvenient to change your insurance plan, and you have to go through the whole process of choosing this and interacting with the insurer. And it is often something that the policyholder will initiate. They don't push it at you in the way that banks say push people all sorts of unnecessary add-ons and coverages. So that is true opt-in, suggesting that there is true informed consent to it. It's a little bit ironic to call it privacy protection when you deny people the option to opt in. Also, you can really ask yourself, what is privacy valued for? It's not valued per se. Privacy is instrumental in promoting other aspects of autonomy. We want to have more personal expression, avoid embarrassment, physical well-being, intimate relationships. These are the things that privacy supports. Driving, auto insurance and driving itself is not an intimate act. It is usually guided by a navigation app that already stores location data and uses it in many, many ways, more than what insurers do, I think. It is subject already to numerous constraints on freedom. We call them traffic laws, highway patrol, interaction with other cars. It is dangerous. It impacts people in a non-private way. It is costly. It is unpleasant. I don't see this as a locus for kind of championing privacy concerns, but they are definitely at the forefront of the resistance. Second is transparency. Some people here know that I'm not Mr. Transparency. I think this is an overstated concern for the law. Who doesn't want transparency? But we know that it's very hard to get true transparency, especially since we are offering people so much information in so many areas. But here there is concern that this particular, using algorithms is complex, is mathematical. People will not really understand what's going on. And unlike traditional rating factors, the formula and algorithm is proprietary. Well, it is explainable. I think that goes a long way towards transparency. I showed you those dashboards. I think people understand why they're paying what they're paying more than in traditional kind of rating, auto insurance rating and pricing. So they get real-time alerts and they see explanations why their premiums change. So again, I don't know what to make of that transparency argument. There is an argument that is developed, a very interesting argument about power imbalance and ownership of data. The power imbalance argument, here I would like to recommend a book by Karen Levy at Cornell that studied trucking fleets and the fact that they are monitored. There is an employment relationship, and there is something that's going on within that relationship between the drivers, who are otherwise the captains of their ship, of the cabin, and the employer that is now able to monitor them in ways that they have not before. That is problematic. Excellent study by Professor Levy. But in this context, I'm not entirely sure how this plays out. Maybe some of the audience here can help me. There is an aspect of data portability. Once you are in one insurer and they know how you drive, they have the data, they give you discounts. you're not going to move to another insurer. Well, is this good or bad? No, you've reached a point where you are getting really good discount, but portability is a general problem with platforms, and there's a general solutions. And this is state law. You can mandate them, can try it. If California were worried about that, they should mandate data portability so that other insurers can inherit one's safety score. There's also a question of who gets the rent. This is a distributive aspect. I don't have much to say about that. Lastly, and importantly, the effect on low-income drivers. So I've seen some articles and reports by really sophisticated people saying UBI is not good for the poor. Why? There are discriminatory factors, not intended, but unintended or disparate impact. First, it measures nighttime driving, and poor people, low-income people work more at night. And second, it does location tracking, and we don't know for sure, say the critics, but it could be that driving in low-income neighborhoods is more costly. Well, here again, nighttime driving, the only time collisions peak at nighttime is on weekends and by teens. These are not exactly the low-income people that we want to protect. Otherwise, collisions peak in the afternoon, in early evening, not nighttime, when most people in mainstream jobs drive back. And so I want to remind us that compared to what? Non-UBI classification has plenty of discriminatory factors like zip code, education, income, home ownership, credit scores. All of these are gone. And instead we have other UBI factors like miles driven that are as we saw low-income drivers. And so, which is what I said. There's also an aspect that was explained to me by some people that build these algorithms, that they're already designed to shrink the weight of what they call non-controllables, things that people don't control, like their zip code, like their location. So with an eye to minimize the impact the regressive impact that it has. So all in all, I see this as I see these. Okay, so this is it. That's all I know about UBI. That's what's in my first draft of my paper, and I'd love to hear any thoughts and reactions, suggestions, critiques that you have. Thank you.
Thank you. So I'll be keeping a queue. If you'd like to get on the queue, you can send me a message in the chat or raise your hand in WebEx. And first on the queue is Ken Abraham.
Hi, Omri. How you doing? I think this is just a terrific paper, and that the broader project is terrific, and that it has the potential not only to be a major contribution to legal scholarship, but to public health, and it's on the public health aspect of it. I just want to talk to you. You mentioned the fact that you're on record as not thinking that disclosure is very efficacious often, but I'm wondering whether a way to start in places where you couldn't otherwise get started would be just to employ the coaching prong of this, and without any rewards or penalties associated with it, and perhaps even without the insurer getting any information from it, right? If in fact coaching alone would increase safety, then even though most drivers don't have very many accidents, over the long term, right, the more people who simply had, feedback and drove more carefully because they wanted to be safer themselves, the better it would be for insurers in the aggregate. And it might be that starting this way would pass muster in states where there were privacy concerns. If the only person who had this information were the driver, then you might not have that problem. And you know, I agree with you that the privacy concern is not surprising, but it is puzzling. Our health insurers and our pharmacists have far more, you know, private information about us. They know whether we have cancer, whether we have a sexually transmitted disease, whether we have heart disease. And they also do some coaching. Now, a lot of it is pretty clumsy coaching, you know, don't eat high-fat foods, get more exercise. But if I had an iPhone that my health insurer, that had an app on it from my health insurer that allowed me just to scan a package of pre-prepared food, and it would say to me, well, given your various risk factors, you know, this is a 3 on the scale of 10 of stuff you ought to be eating, I'd pay attention to it, even if even my health insurer weren't learning about it. And since my health insurer can't risk rate my premiums, nonetheless, it would still affect me. And your paper has prompted me, you know, to make a note and get in touch with my auto insurer, which is Chubb. I don't think they offer this, and say, you know, can you give me some device that will help me drive better? So you know, I understand that this won't necessarily affect the behavior of a high percentage of people, but it sounds like if it affected 10 or 15%, coaching alone might be valuable.
That's a great point. I take it as it is, and I think that some of the new connected cars will probably already offer that. I do see some of the data suggests that part of the effect, a large part of the effect, is due to the premium discount, not just the coaching aspect, but you're right that maybe California can be persuaded to kind of give it a try if it's only coaching, and maybe it is not even part of insurance regulation, so it'll be easier to do. So it's a very valuable thought. Thank you.
So we have a long queue, and next on the queue is Josh Teitelbaum.
Great, thanks. Yes, hi, Omri. Long queue, I'll be brief. This is a great paper. 2 quick points. In the benefit column, I would add that there's a welfare loss if insurance is mispriced, right? And so the current, you know, without UBI, the rating and experience rating technology, as you pointed out, is sort of clumsy, and UBI makes it more precise. And so their welfare gain just from pricing the risk correctly. And then, but the other point I had is because these are opt-in programs, any of the studies you're citing that are relying on the insurance data, and so therefore the opt-in, you know, not some experiment or randomization, but the opt-in crowd, there are obviously selection issues. And so I assume those studies are trying to deal with those. And so the projections that you're making, saying if I can take this result and say that's going to reduce injury accidents by 25%, I assume their work and your extrapolation already deals with the selection issue. But to the extent it doesn't, then I would just caution you on making, you know, extrapolations from what could be a very self-selected group of opt-ins.
Yeah, no, that's a very important point to clarify. In fact, 6 or 7 years ago, Kyle and I wanted to do some of this empirical work, and were kind of had a hard time solving with the data that we had, the selection issue. The selection issue, I'll just explain, you know, Josh, of course, raised it, but very briefly, is that more safer people join because they are the ones who are going to enjoy the biggest premiums. So if you compare them to those that didn't join, you'll get an effect that does not have to do with improved driving, but just with the fact that we've got a selection, selection bias.
Or the people that join could be more predisposed to be coached, or it could be more effective for that group of people.
So now, yeah. So what we really want to see is how people that join change over time. And now I take it that the problem is that they select on a particular different attribute how responsive they are. And maybe if we try to extrapolate this to the entire population, we will get a smaller That is a valid point, and I need to qualify my enthusiasm by this possibility.
Great. Dan Schwartz.
Great. Hi, Omri. So I also think super interesting. As you know, I think you managed to convince Ken and me as we were writing our last paper to sort of make a pretty explicit carve out for this type of stuff from our skepticism. So I appreciate that, because otherwise I'd be feeling a little bit bashful for having overgeneralized our point. Um, what I do want to say, though, is to me, the problem you're pointing at, there's a little bit of a mismatch between your enthusiasm for this product and the problem you're pointing at. Because none of these laws say we prohibit individualized driving. Like in California, it's actually, it's a much broader law that essentially says you can't do anything other than use these particular factors. And so to me, the problem is actually more general. And it's a problem with the structure of rate regulation in insurance, right? And one of the things we just know, rigid rate regulation does is it deters innovation. And I think this is one specific example of that. In the context of Prop 109 in California, for instance, the goal, in fact, of that statute was to require insurers to do almost exactly what you're suggesting, which is to use driving-based factors and not to use proxies that might have. And so, at the time, the driving-based factors were essentially thought to be, well, here are these five, right? And so it's sort of notable, right, that now we've had technological innovation where arguably the statute of the proposition isn't even serving its underlying goal. So I guess I would just say that I think it might be worthwhile to broaden out the sort of criticism, because this may just be one example of sort of the types of innovation that actually you can deter by having such a rigid system of rate regulation and review. The other thing I'll just say is also by having a regulatory system that's focused on the wrong thing. I mean, this is sort of a long hobby horse of mine, but it's very odd to me that we have rate regulation that's focused on preventing excessive rates in auto when those are like super competitive markets. But then that really does very, very little to look at, discriminatory impacts. So I think, as I said, to me, there's a broader story to be told about the criticism of the regulatory regime, where this is just one example. But I don't think that detracts from your point at all.
Thank you.
Next on the queue, Zach Krunk.
Hi, Professor. Thank you very much for this interesting conversation and paper. One point that I was curious about is your thoughts of the possible antitrust implications that could come up with some of these car manufacturers actually creating or implementing this technology and then tying the sale back to the car. So, for example, if Tesla has the UBI technology, and in order to buy a Tesla car, you're required to buy that type of insurance, would that create sort of a monopoly problem or an antitrust concern for the industry? And it seems like some of the other car manufacturers are doing the same as well.
Yeah, that would be an interesting thing to explore. I am not an antitrust expert, but every kind of instinct that I have suggests that maybe the antitrust authorities should prioritize other things, that there are aspects in which, Tesla may be trying to maintain its market power that are more problematic, for example, compatibility of charge stations, than trying to bundle in an insurance that is, by the way, I think getting Tesla insurance from Tesla rather than insuring one's Tesla at Geico is much cheaper. So these are the kind of things where you'd like competition. I would like competition to fix the problem. And as the EV market becomes more competitive, and the EV cars are the primary ones that are connected, I see less of a problem that they use the data they already have from helping guide these cars in also pricing insurance. But it's an interesting topic. If someone were to think about it more carefully, they might reach different intuitions. Thank you.
Peter Kutchenberger.
Thank you. I'll just reiterate what everyone else said. This is fascinating. Thank you for writing this and presenting. Two quick questions or points. One is, I think the privacy concern, I think, is major, and maybe even more so. And I think a lot of it is based on the fact that insurers will have to be able to track not only how many miles you drive and but where you drive. And I think that does have a significant potential, to sort of bring in a version of zip code factor, zip code rating, with all the potential problems that has. Having said that, I agree with you that it's still a better alternative, at least in terms of discriminatory factors, than many others. But I do think that's a concern. I've asked my students for years about, usage-based insurance and how many have it, and these are insurance law students, and more people know about it, but almost no one uses it. When I ask, and this is all obviously anecdotal, it's because they don't want insurers to know where they're going. They don't want them to know where they're driving. They don't want to get offers about, yeah, you're passing McDonald's, you want a free coupon. So those privacy concerns, for whatever it's worth, do seem very significant and based on location. The second question is, how big do you think, leave aside California for a minute, because as someone noted, there's Proposition, I guess, 3 or whatever, so they have particular restrictions. But how big is the regulatory barrier, really, given that more and more companies are doing this? I mean, there's a knowledge cost, but it's pretty prevalent. I mean, it's not hard to find a auto insurer, that has approval, obviously, and to get it. So I'm wondering, is that really a major issue outside of California, which isn't really a regulatory problem as much as a legislative, I guess?
Yeah, good. So look, I know that people say that they don't want to be tracked, but at the same time, everywhere they go, they put on Google Maps or Waze that tracks them in a much more intense way, the paths, and does sell them coupons for Dunkin' Donuts, and not alert them to Dunkin' Donuts, something that the UBI apps that I've seen do not do. So there's some kind of, it's puzzling that people say that, it's puzzling that people say that. But I don't take it entirely seriously. It's also not clear to me that there is zip code rating and location data. I mean, as I mentioned, the modeling folks that I talked to told me that there is a particular effort in the algorithms using statistical techniques to reduce the weight on these uncontrollables. In the first place, it wasn't clear to me, and this is something I'd love to hear more from people within that do these things, why even location matters, especially for third-party insurance, for liability insurance. Why does it matter where you're driving in one neighborhood or another? But be that as it may, I take that this is at the core of the privacy concern, and that's why I'm trying to learn as much as I can about it. It's true that outside of California, you can get it everywhere. It's possible that there is other distortions. I mentioned New York not allowing insurers to reflect the data in prices, especially with respect to dangerous drivers, where they have low safety scores and they should be charged higher premiums, or people that text a lot should be charged higher premiums. But New York says, no, you can't do that. So, how much this really matters in the end, not sure. It's also, the fact that in the end, we will get to the promised land means that it takes years to do that. Why is it that Tesla is only approved in 12 countries, in 12 states? Tesla insurance has been offered, but it's a slow process and people die. And every time there is an unintended crash of a Tesla autopilot, the news is all over with stories about it. But the big story is that Tesla insurance is not licensed in many states, and the life-saving effect that it creates is forfeited. So that's where my thinking is, this kind of asymmetry in our sensitivities and sensibilities.
Thank you.
Jake Dunnigan.
Hi, thanks. Can you guys hear me?
Yep.
Great. One of the again, reiterating, very interesting topic. As a consumer, one of the things that I wanted to address is that my motivation for purchasing auto insurance is not to make driving safer. For me, it's because I know that driving is dangerous. And I think when you study insurance and you really think about insurance law a lot, you start to think of insurance as being purposeful in its secondary effects, right? So the secondary effect of good insurance is that people drive better, potentially, right? But it's not the reason why I purchase it. And I think that some of the pushback that I have personally on signing up for a program like this is because I already am at an imbalance. Particularly, you spoke of power before, but information. I have no one to compare my driving to, nor what the actual risks are overall. And providing the insurance company with my driving profile just furthers the imbalance because I have no other data point to compare it to. So I think that if there was some if the insurance company were able to provide to the public a comparison, like a safe driver, something that you could demonstrate yourself against, or some way to know if your rate's fair, I think that might reduce the pushback a little bit if they could be a little more upfront about what the overall risks are to the consumer. But my main point, I think, is that my individual pushback is about why I buy insurance, and not what insurance does for us.
I think you're right on, Jake, in terms of describing how people think about it. But I want to challenge the validity of that approach. I think that when I ride with my kids in the car, can have a 30% smaller probability of fatal collision, I am the direct beneficiary of this, and it trumps every other aspect for me of the value of insurance, and the fact that it potentially happens. Folks here have been involved. I do think that insurance has a regulatory impact, namely it helps people it helps policyholders behave more in a more cautious way. But I know this is a controversial view, and maybe I am on the extreme end of the naive, optimistic side of it. But even the critics that are sitting in this room right now recognize that in this context, it does have some traction. So people should, what I'd like people to do is to try it out, to maybe if they read this paper, to try it, as Ken Abrams said. And it was, when I did it a year ago, when I joined the UBI, as I started reading about these things and thinking about it, it was mind-blowing, the effect. It was so much fun to get, it is still, every month to get the premium discount. It is kind of like, people, I'm not on social media, but I know people on social media check their likes, they check their status all the time, what is the feedback that they get. I do that with my safety scores several times a week. What's going on there? I come home and I apologize to my spouse and saying, I got 2 alerts today. We went down from 97 to 96. My fault. I'll make up for it. It's kind of a fun challenge that insurance has become to constantly influence and have the power to change the premium that I pay. So maybe Jake, you will be persuaded to give it a try.
Maybe. Thanks for a very interesting talk, no matter what. Thanks.
Next on the queue, Bernie Birnbaum.
Oh, great. Bernie, I really want to hear you. Bernie knows more than I do about this stuff, so I have to really take notes now.
Okay, well, first I want to join you as being one of the optimists for the great potential for usage-based insurance. And I also think that a lot of the problems or the opposition or the impediments to broader take-up can be addressed pretty readily. And I'll explain why. But I'll start by saying that there are a variety of UBI products out there. Some of them involve just collecting data on hard braking, acceleration, hard cornering. Others, like Tesla, collect thousands of data points every second. And Allstate and Progressive are in the sort of the latter camp. So there's quite a bit of difference in the amount of data that are collected. There's also a difference in whether the program is ongoing or just used for a 30-day or a 60-day period to give you that discount. The programs that I've used, they only use it for 30 days, and that's the last I've heard from them. So there's no ongoing support. So how the program is structured has a huge impact. I think that the privacy issue is important, not because somebody is monitoring me, but because of the data that insurers collect. There currently no limitation on what insurers can use the data that they collect for. So, for example, Allstate's subsidiary, Arity, uses the telematics data for real-time marketing, as does the ISO subsidiary. So just as people have a legitimate privacy concern about their social media use, you don't want sort of telematics data to sort of fall in that same camp. Another concern is sort of asymmetrical use. If the insurance company has access to the data that they can use in a claim settlement to demonstrate that you're at fault, but you don't have access to it, then that's an issue. All of these problems that I've just described are easily addressed by having a strong sort of digital rights policy as part of the agreement. Another point I wanted to make is that Prop 103 doesn't prohibit usage-based insurance. It requires 3 driving factors be given the greatest weight, and that any additional factors be approved by the commissioner. So UBI can be approved by the commissioner, and it could have the 4th highest weight. It might not be ideal or as the same as in any other state, but it's not explicitly prohibited. There is some effort at portability right now. ISO has a database that they're using to collect from a variety of insurers so that consumers can take their telematics data from one to another. The problem is that the amount of data that a particular insurer requires may not be the same as what's in the database. So those are some thoughts, but as you can see, all of these issues, I think, are easily remedied with some meaningful regulatory oversight. And I don't mean sort of rate regulation, I simply mean meaningful regulatory oversight in terms of a fair contract with consumers that's explicit to consumers that they have confidence that their data isn't going to be used in a way other than for the purposes of loss prevention and rating. Right now, there's no such guarantee. So thanks so much for your research on this. It's really inspiring.
Thank you, Bernie. And of course, I read the parts of the report, and there's a big report that you were part of and learned a lot from that. And thank you for sharing these additional thoughts. You know, I'll just mention one thing, and regarding your point, that in California, it is actually not that hard to license UBI auto insurance, and it's all in the hands of the insurance commissioner, which is all the more kind of the point that I'm making. It is part of this. Why is the insurance commissioner resisting? You know, when I followed some of the debates on that in the recent years, he had this kind of exchange on Twitter, the insurance commissioner in California, with Elon Musk, who complained that they cannot offer Tesla insurance. And there was something that, you know, the regulators signaled their openness to reconsidering what was, in their words, an antiquated system of insurance rating under Prop 103 and wanting to breathe new life into it. Well, that's great. But then on Twitter, the insurance commissioner says, and I'm quoting, I found it here, "We won't bend on protecting consumer data, privacy, and fair rates. The Department of Insurance continues to uphold and implement the consumer protections set forth in 103. Since 2009, we've allowed vehicle data only to determine miles driven and only in the way that protects drivers' privacy. So, this is kind of, that's where I'm so bewildered. It is so easy to allow it to introduce the technology. And there's so much value in it. At what cost are we willing to protect the consumer privacy? And I take this kind, I cited this because I think, as also mentioned by other, comments before, this is a very prevalent thought that people have. Now, I'm not a politician, I'm not going to lobby these things, but all I can do is try to alert people to the fact that, to inform the few readers that read my work, that there's something else going on here, and maybe it's time to change their mind on it. Thank you.
So we're 1 minute over time, and I might take the privilege of asking the last question if you have another minute or two.
I have endless time.
Okay. So I was interested in the part of the paper that talked about how the data that's being recorded in these devices might be used against the driver in the event that they were texting while driving and then had an accident as a result. And my understanding is that some auto insurance policies they exclude coverage if the driver is committing a crime, and texting while driving is a crime, and so they would have an opportunity to do that. And it seems to me that it's one thing to treat drivers who habitually text while driving differently, to sort of discriminate against them, but it seems different to discriminate, or to it seems like the risk that one might, in a kind of unusual moment of negligence or acrasia, like look at your phone, like we're all subject to that. We all are fallen creatures, and that we like the idea that our insurance will cover us in those instances. And if the data can be used to exclude coverage if we happen to have one of those moments, then allowing the tracking is strictly going to constrict coverage for a type of risk that it seems like is exactly the kind of thing that we at least as policyholders would like to be able to insure against.
Can you explain to me, so this is where, the auto insurance law better than, on what grounds would they exclude?
I just Googled this,
But
my understanding is that there's an exclusion in at least some auto insurance policies for accidents caused while committing an illegal act or committing a felony. And so in some states, driving while texting is illegal. And I don't know how much precedent there is for this, but I saw something on the internet, some lawyer writing about how, at least in theory, the insurers could deny you coverage if they see that you're texting while driving.
I see. Well, I would have liked to see the New York law saying you can use texting and, kind of distraction data for pricing, but you cannot use it for denial of coverage. That would seem to hold the sticks from both ends. But it's a good point. I didn't think about the fact that some of these restrictions, they may have other, some more justifications that are more plausible.
Well, great. Thank you so much for virtually coming.
Thank you. And if there's still anybody there, I don't see the list of participants that are still here, that has some kind of a more insider knowledge of this industry and wants to continue the dialogue with me and help me talk to folks in the industry that actually run these algorithms, I would be immensely grateful. So please reach out.
Great. Okay. Well, thank you.
Travis, how can I get the printout of the chat? I wasn't able to read it.
I will send it to you.
Okay, great.
See you all next time.
See you. Bye-bye.